Hello to everyone, my name is Gregor and welcome to our new update Surfing the Elliott Waves, where I will look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I will cover Euro, Cable, Dollar Yen, S&P 500, DAX and Gold. Now Euro Dollar is coming to the downside as we are seeing US dollar keeps moving higher in risk of environment. As you know, there are plenty of reasons for dollar strength. For now, that's still obviously the inflation, which is the global problem. We are currently seeing inflation again coming higher in a lot of countries, especially because crude oil is turning to the upside. So US yields are driving the US dollar higher, and then you have stocks finally coming to the downside. And one of the reasons for lower stocks could also be a potential US government shutdown on October 1st if they will not reach the agreement. But normally this is happening that they reach the agreement in the last minutes, and maybe this will be seen in the markets as positive if this really will happen. So I still think that dollar could potentially see some resistance going into the October, especially if stocks will really stabilize and turn back to the upside. Also, seasonal patterns for S&P 500 are showing positive signs for October. Okay, so maybe this is also something to consider. Now, when it comes to the Elliott wave principle, the euro dollar still is coming to the downside, making a sharp correction here, but I still think it can be an interesting support not far away, because we are retesting this January 2023 level. So that's the very nice technical levels, but of course it's still currently a downtrend unless we see 5 waves up on a smaller degree time frame charts. But for now, before we can say that potential supports may not be far away, is we have to respect the intraday substructures. And you can see that I'm tracking ABC decline, which means 5 waves for wave A, then you have 3 waves rally for wave B, and then another 5 waves down should unfold for wave C before we can call a bottom. But for now, that's still not the case yet. Notice that we are missing few more subwaves here to complete the bearish structure. So as long as we are below 106.30, I think that there can be more weakness after this wave 4 rally all the way back towards 104, which is the major support in my opinion. There you have also, not far away, you have this equality measurement, wave C that equals to wave A. So we are approaching some very interesting supports on the euro, which I think can offer very interesting bounces in the last quarter of the year. Now, looking at cable, it's coming sharply to the downside, and one of the reasons for this extended drop or for weak pound across the board is obviously Bank of England, who surprised and did not hike interest rates. Obviously, they are afraid of recession, so pound has experienced a very nice extended drop, which by the way has been bearish since the pair formed this wedge pattern or ending diagonal in a 5th wave. If you recall, we were tracking this one, and also afterwards we have seen this broken trend line. So now when we are tracking ABC drop, we should respect these potential supports at the former wave 4, which comes at 1.18. okay, that's also where we have this 50% retracement, but currently we are at the 38.2%, also the first FIPS. But again, same story like on the euro dollar. Before we can say that this bearish structure is finished, we have to see 5 subwaves within wave C. And if you look closely here, notice that that's a pretty strong extended drop here over the last few days, which also has seen a broken lower trend line of this base channel. Okay, so this typically suggests that you are in the middle of a bearish impulse. So wave C is an impulsive wave, and impulses are made by 5 subwaves. So that's why I'm saying that this short-term structure is still incomplete, and I think that current bounce could unfold as a wave 4, and then we may see the final leg to the downside for wave C. So again, we can be approaching the supports, but this short-term patterns suggest that downtrend is still not completed. Now let's take a look on dollar yen. Now as we approach 150 level, Bank of Japan is becoming nervous, I believe, and there can be some speculations about the potential interventions. So 150 definitely very strong psychological level, and what's very interesting is that we are also seeing 5 waves up from that July lows moving into this big 150 area. So again, from an Elliott wave perspective, the trend is clearly bullish, but because we are in fifth wave, we should be aware of our reversals. Okay, so I think that these reversals again can occur in October, meaning in a few weeks. So also keep in mind that we have seen the current breakout out of this triangle, and normally moves out of a triangle suggests that it's final puzzle within the higher degree trends. So this can be the final leg here, coming up from 147 into 150 resistance. But again, it's not a top in place unless the market says so. And what I mean by that is that we have to see 5 wave drop back towards 147 to make sure that high is in. Only then I would favor potential short ideas here on this pair. But for now, it's still an uptrend and could be a little bit too early to look for shorts because the risk is too high for me. I mean, we never know how far the fifth wave can extend, but it's definitely a different story if you have already a reversal in place. Then you know where the invalidation level stands. And now let's take a look on the S&P 500. Now the S&P 500 is turning to the downside. Notice that VIX is turning higher here. So obviously there is some fear around because after all we have high interest rates trying to slow down the economic growth. Then we have this, as I said earlier, potential government shutdown. So there's definitely some fear on the markets, and this is obviously visible through the charts as well. So for the end of the quarter, looks like that S&P 500 is coming to the downside, but notice that this is very nice, very interesting, attractive level, I should say. It's this trendline support connected from 2022 lows. You have this gap going back all the way to June that has been filled. You have this swing support also going back from August of last year. Plus you have 3 waves down. Okay, so as long as the market is trading above this invalidation level 41.78, I think that that's still potential very good support. But again, you need completed subdivisions on a smaller time frame for this wave C before the correction can be finished. So maybe there is going to be more weakness after current pullback, after current rally. Now definitely very strong resistance is at 4360, okay, where is the distance for wave 4 compared to wave 2, and then you have the previous swing low here at 4400. Okay, so that's definitely the whole potential resistance area. You definitely want to see this one broken on a daily close basis before we can say that low is in. So in ideal scenario, we will see wave 4 rally and then a final fifth wave to the downside that will complete the higher degree wave C of this correction. Okay, so still it can be quite interesting for stocks going into this final months of the year. Now let's take a look also on German DAX. Now German DAX is coming to the downside. We have been tracking this one for a while, and we also noted that we are looking down for wave C because we were tracking a triangle in wave B. So far this played out perfectly in Elliott wave terms, and we are currently testing the first support at 61.8%, but notice that there is a very big level at 15,000, very strong psychological level. So maybe slightly room for more weakness here because, as I said earlier, we have S&P 500 maybe still with some weakness after the rally, and we also have the euro in bearish mode as well. So whole substructure suggests across different assets that maybe this risk off could be coming into, could try to stabilize a bit, but we are not seeing the completed substructures just yet. Okay, this could be just minor wave forward within this ongoing wave C. But again, maybe in October, late of the next month, at the end of the next month, we could see some very interesting reversals on these markets. And now finally, let's take a look on gold. Now we've been calling a bearish pattern on gold. We've been looking for a triangle here, which obviously has been the case because we are seeing a very strong break to the downside. So obviously gold is not the perfect inflation hedge. It's driven to the downside because of the higher US yields and the US dollar is strengthening. So obviously metals are in, on a back foot. But looking here at the whole structure, well, keep in mind that that was the 5-wave rise from that low, and now we are tracking the counter trend movement, and this counter trend movement should then be made by 3 waves. So that was wave A, you are now in a wave B, meaning more weakness should be seen now within current wave C, which is already breaking the lows, but ideal support would be the first here around 1850. There is this 50% Fibonacci retracement level, and then you have the 61.8% coming in around 1800. Okay, so that level is also very interesting. So keep an eye on more short-term weakness, okay, here on gold, because again wave C should be made by 5 subwaves. Here I have maybe a closer look. Okay, so still it's ongoing downtrend, but when we will have this when we'll have these 5 waves down in place, that's when I will turn again to the upside bullish. But for now, we are still in the middle of this current wave C weakness. Traders, thank you very much for your attention. I hope that you enjoyed this video and talk to you again soon. Bye.